Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a look at the action in today's session, where we saw it mixed and mostly unchanged, Ken.
Yes, a couple of upgrades in the Dow. Goldman Sachs was upgraded, but we have three stocks to talk about. General Mills jumps on earnings. GIS is the ticker there. Also, drug distributor McKesson, MCK, and finally Neurocrine Biosciences, NBIX in the biotech space.
All right, well, analysis headed your way on those three stocks. But first, let's take a look at the major indexes. The NASDAQ down just a smidge, about 4 points today. We also had the S&P 500 down 3 points, but more movement in blue chips and small caps. The Dow up 0.3% today, and the Russell 2000 down by about 1.4%. So just a little bit of mixed, mostly unchanged action today, which at least we didn't see a sharp drop to follow the bearish action that we saw on Tuesday, Ken.
Yeah, I mean, really, the story in the market was the weakness in small cap stocks. Like you said, the Russell 2000 really took a hit, and blue chips outperformed not only McDonald's, but it was also Goldman Sachs that got an upgrade today. So blue chips were in the driver's seat for most of the day, but the Nasdaq Composite and S&P 500 closed up near their session high. So we'll take it as the market tries to find direction here.
And we talked yesterday about the close below the follow-through day low, marking a 90% chance that the rally will ultimately fail. There is a 10% chance that it could work out. And we did look at a couple of examples this morning with Eric Kroll on IEBD Live, but Ken, in both of those cases, whether you had a close below the follow-through day or a distribution day immediately after the follow-through day, there wasn't a lot of oomph to the rally, to those rallies that did work out in those two scenarios.
Yeah, exactly. And the main issue for the Nasdaq and the S&P 500. I mean, the Nasdaq really doesn't have to go that far to get to its 50-day moving average. So if this is going to be a tradable rally, it could be a pretty quick one because with the Nasdaq still stuck on a downtrend, it's likely it'll get some resistance at the 50-day moving average, just like the S&P 500. So this is not a great environment right now. I mean, it's possible. The S&P 500 eventually could power through the 4,000 level and maybe get back above that 50-day moving average. That would truly break it out of its downtrend. But yeah, I'll tell you what, you're going to need a lot of institutional buying. You're going to need to see a lot of heavy volume to the upside, and we're kind of in the summer doldrums here. Right. So it's just a very tricky market right now. And again, yeah, yesterday's action was quite bearish, and today really wasn't anything special, but we did get a close near high, so we'll take it.
Okay, let's also take a look at the Dow, as you mentioned, outperforming today. And even though the chart is slightly delayed, so it is a little bit higher than what we're seeing here, this blue day doesn't really stand out on the chart. So this one day, especially today, is not changing the situation.
Yeah, I mean, the rally is still intact, but like you said, the bearish reversal yesterday definitely called the rally into question. And just like the Dow, I mean, just like the Nasdaq and the S&P 500, the Dow is has to conquer that 32,000 level, and then it has its 50-day moving average to face after that. So the market is definitely challenged, and we're about to enter second quarter earnings season, and trying to stay optimistic that we'll get some good reports and good guidance, but that really is a big question mark as to whether or not we'll see that.
And Ken, you mentioned the weakness in a small cap. So here's the IWM ETF, which tracks the Russell 2000. What was driving this weakness today in small caps?
Well, it's most likely energy, because a lot of energy stocks really reversed hard, and I believe the sector is represented in the Russell 2000. So, and there you see the XLE down more than 3%, and some of these really strong performing oil and gas producers that we've been talking about. It looked like Diamondback Energy was going to find support at the 200-day moving average, but that fell fell pretty hard. Looks like another test there. Devon Energy was also down 5 or 6%. So tough day overall for the oil and gas stocks.
Definitely. Okay, let's take a look at the 10-year Treasury yield, which came in a little bit, but it's still holding above that key 50-day.
Yeah, and there was a big drop. I mean, there was a lot of money flowing into the bond market today. That caused yields to fall, and we'll see if the 50-day moving average holds right around that 3% level there. So I think the 10-year yield was down, about 11 basis points to 3.09. So we'll see if if it does eventually test the 50-day, and we'll see if it holds. But that 3% number is certainly 3% is a pretty critical level to watch for that yield.
Right. And on the move today, General Mills up over 6%, strong volume. This was on earnings, so breaking out of a base here. I mean, Ken, when we're leading a show with General Mills earnings, I think that tells you a lot about the kind of market that we're in.
Yeah, really, the cup board has been bare for a while, and that can happen when you're in a nasty sell-off like we are. But General Mills had a really good report, good earnings and sales beat. You can see the numbers at the bottom there. Revenues up 8%, pretty impressive. Earnings up 23%. They also raised their dividend, and this is a stock that yields around 2.7%. So these dividend-paying stocks are still interesting. Or they'll usually see money flow when you're in an uncertain market environment. People like just to park their money in yield. But General Mills, I mean, this is a great technical setup, and you don't see too many charts that look like this. This is just a breakout and a stock that closed near highs with a good relative strength line. Still in that 5% buy zone. Some people may want to see how it trades tomorrow, because even some of these these dividend-paying stocks, sometimes the breakouts just turn south. They fizzle, yeah. So, but this is just a good-looking weekly chart here, and a nice breakout for GIS today.
It is, and the short-term outperformance is undeniable. You look at the personality of this stock, though, likes to hug or at least pull back to that 40-week line. And let's see, it's probably over 10%. Yeah, it's about 11.5% above the 40-week line at this point. Less than 7% above the 10-week line. But it seems like even in the strongest industry groups this year, Ken, breakouts have been uncertain, and it's better to get in on an early entry. So, your thoughts on buying this into strength versus a pullback because it has that personality.
Yeah, I mean, I just think that it's such a difficult environment for technical breakouts right now. You did have a good heavy volume gain today, but typically, if it's a really strong breakout, you should see good follow through with volume the next day. It's possible we could see that with General Mills tomorrow, but typically, what you see is lately, when you're in a market that's under some distribution, you see a good breakout one day, and then the very next day sellers hit the stock. So ideally, General Mills will hold on to a chunk of today's gain and move sideways, show strength and support. And if it does decline after this breakout, you want to see the decline in light volume. So I'm sure some people nibbled today, but those that have been trying to buy breakouts in recent weeks that have been hurt probably didn't, and might wait just for a pullback here.
Yeah, buyer beware. And then the other thing is, just due to the defensive nature, the team has been talking about how defensive stocks aren't leaders in a strong new rally. So if we do get that, we don't know how long the bear market is ultimately going to play out, when we might get a substantial sustained rally. But that's, I think, the question, Ken. Do you go with something defensive if that's leading now, but might not when we do get a more meaningful turn in the market?
Yeah. Well, I mean, the healthcare sector is also typically defensive, and you do see some fundamentally strong stocks in that sector. So that's a defensive area of the market that is working right now. But I just have to say a lot of other defensive areas that investors thought they were safe in, maybe even real estate investment trusts. Remember the dividend yields that they pay, and but a lot of those have rolled over. So So typically in a bear market, it's hard to find safe havens, which is typically why it's just good to kind of sit in cash and maybe nibble here and there, but mostly stay out of the market's way and just enjoy the cash position.
Right. Well, let's take a look at MCK. Speaking of the medical sector, this is an impressively strong stock. It has an RS line blue dot, and not just is it outperforming right now, it has a track record of doing so with a strong run in the latter part of 2021 and for the bulk of 2022 as well. A strong move since a breakout last fall, and it's working on a new base, Ken.
Yeah, I mean, this is a super impressive stock. Like you mentioned, you see the last time it broke out around the 160, 180 level. Yeah, right in that area there. It really trended nicely above its 10-week moving average. And typically after a gain like that, it's not surprising at all to see a stock pull back 20, 25% off its high. That's normal and just the way a stock digests its gains after a big run. But McKesson, you can see that flat base. We know it didn't pull back more than 15% off its high. It's back above its 50-day moving average. Look at how it went above the 50-day line with some volume there, and it's just kind of sitting there. And again, it's a stock that could try to move into new high ground and might be worth a nibble. It's just a super strong stock and one of many healthcare stocks or stocks in the healthcare sector that are acting well.
Would you go with a slightly early entry here, Ken, for McKesson, or would you wait for the breakout?
Yeah, I mean, that trend line there works, and it looked like you could get a breakout over that trend line probably just before the stock gets to that 338 level. So yeah, I think that's a good trend line, and if it moves, extends gains tomorrow, you'll probably get a nice little move above that trend line, and I think it would be fine.
All right. Well, I'll set an alert just in case.
Yeah,
we could
you have a lot of practice.
You
have a lot of practice drawing trend lines. You're getting good at that.
Yeah. Well, it's always good to have stocks on our watch list internally, so that way, if we do see trend line alerts during IBD Live, we can talk about it. So I always try to do that when I can.
Absolutely.
And let's take a look at maybe a newer name to the audience. But Ken, this is one that you uncovered in your research, and this is NBIX, Neurocrine Biosciences. So if you're talking about biotech stocks in favor, this is a decent looking base here that is being formed.
Yeah, I mean, though, so it is a nice setup. You can see that 100 price level has been kind of a wall, but NBIX was able to pop over that 98.74, that recent high there. So this one could work. Now, one issue is that if you go to the weekly chart, you see that this is a stock that's been having a problem trending. It's been just kind of a long sideways movement. However, if you do get a breakout over that 100 level with some volume, that would be a bullish technical sign. And there's a pretty good fundamental story here. I mean, this is a profitable biotech. It's got accelerating revenue growth in recent quarters. They have a very vibrant pipeline. They do psychiatric medication, some Parkinson's, and so lots of phase 2, phase 3 trials going on. So I'm going to do a little more work on this one, but I do like the annual estimates here, and like the fact that the stock is outperforming, and it's got pretty good fund sponsorship too. There's a lot of funds that own this stock that we like to see. So it's a good one to watch.
Great, and we can do that by opening the right-hand panel here, going to owners and funds, and there you go. Those are the 3 funds. Yep.
The Janus Henderson Enterprise, Franklin Growth, and the T. Rowe Price New Horizons, which has got a good long-term record of performance. So that's pretty impressive fund sponsorship. And again, the annual earnings estimates are there. We talked earlier this morning. You got 2 quarters in a row of declining earnings. But when you look at that R&D percentage in the box just above, R&D is 28.9%, which means that the company is spending about 30% in its latest fiscal year, they spent about 30% of their total revenue on research and development. So when you get some earnings hiccups like that, it usually just means the company is just spending, and you have accelerating revenue growth there. I think that kind of offsets it. So I think it's a good one to watch.
All right. Well, a great review of those 3 names, Ken. Thank you so much.
You're welcome.
And thank you all for tuning in. We'll be back with more tomorrow morning on IABD Live. So make sure you watch for our real-time analysis of market conditions, stocks on our radar, trading strategies that we utilize, and so much more. Investors.com/IABD Live for all the details. We'll see you there, and we'll see you right back here tomorrow after the close.